Hello, everybody. Jim Malone here. It is Dallas Trading Floor, and it's Thursday. Man, the market is pulling back. So, it may be getting time to take a little bit of a different strategy. I know that today what I did was I shorted Lululemon, and I have some slides for that coming up really quickly. Let's see. Oh, yeah. Okay. So, yeah, I mean, we're off 700%, and it's it may get worse before it gets better. So, it looks like Jerome Powell is not going to support the market as much as he's been supporting it. So, it looks like we may be, seeing a lot more sell-off here. Just want to show you kind of the statistics here, and basically the market direction is down. We are down below that key level, that 13,000 level on the Nasdaq. The S&P is off as well, 1.69%. The Dow Jones is off, and the volume is up. So that tells us that we are probably in for some kind of a change in the market direction. And you can see I have my little bear up there because I think we may be entering a little bit of a bearish market. So, I may be closing up some of my positions in the short portfolio, and I may be moving to short the market a little bit more. So let's take a look at the Nasdaq Composite. It kind of fell off the. It kind of fell off the. It kind of fell off the side of the mountain here, and we blew past that very, very critical 13,000 level, and that means that we were probably going to move lower. We tested once here, we tested once there. Now hopefully it won't continue going. Hopefully we'll get some support, hopefully at 1250, 1200, but it does look like the character of the market is changing. And we do see quite a bit of red bars there, meaning that is selling activity. Just kind of wanted to give you an idea of what I did today with a stock called Lululemon. I'm sure you're very familiar with it. It has been a tremendous performer up until now. But what has happened is, like every good thing, it has to come to an end. So basically what I did is I opened the short right about 300 here, as you can see, and it's moved lower. I'm going to be making a little video on this for output after the show. But basically, this is the chart markup that I have for Lululemon. As you can see, this is a classic head and shoulders pattern. We came up, we had an all-time high up here, basically back in September, about 399.90. Then it kind of it went down, it tested, and then it stayed pretty much above the 40-day moving average until about here. So what happened is this is the first shoulder, this is the head, not a very high head. Typically they're a little bit lower than that. They're a little bit higher than that. This is the second shoulder, and then it moved below the 21-day moving average, tried to rally on weak volume. You can see there's weak volume there. And then, once it tried to rally on weak volume, then it passed below the 200-day line, and then it started to break down, and then it rallied on, a more weak volume, and then boom, it's moving down. Now, how low will it go? I'll probably close the short, probably, in about maybe the 220, 230 level, just depending on how low the market goes. Just overall, this is kind of what I have long and short. Pretty much everything's in the red here. It's amazing. I'm off a little bit on Ford. I entered that at about 12.14. That's the buy point. I'm off on Halliburton. I'm off on Rent-A-Center. I'm still up overall, but today I'm down on Mosaic, down on Grinders Construction, and of course on Lululemon. Now, of course, with Lululemon, because I shorted it, actually, the lower this goes, of course, the more I gain in profit. So just kind of be very careful. Good time to possibly go, at least to all cash, and maybe consider some of the other shorting mechanisms, such as the SQQQ. We'll be looking on that in just a second. and some of the other things. But we definitely are in a situation we're in a situation where we're basically, it looks like we're going to move from a uptrend under pressure to possibly a correction. That isn't for sure yet, but it's looking more like that. It's looking more like that. It's looking more like that every minute. So that's one thing I want to be very clear on. I think that we may be moving to a market under correction. So definitely something to be a little bit, we want to tighten up where our positions, and we probably want to do a few things to get ready because you can make money in a down market. It's just a little bit different than in an up market. So it's the kind of thing where you're gonna basically want to get into cash. I was over 50% into cash myself, and you might want to consider doing that too, just because I do think that we're going to be in a situation pretty quickly where we may be we may be moving a little bit lower than we are now. So that's basically the long and the short of it. Okay, so let's do this. Let's get some of the questions. Thank you for holding here. Let's see. All right. Hello, Jim. When will this fall stop? Thank you. Well, here's the thing. I think that it's gonna pull back very hard. We're very overvalued right now. I just kind of want to show you. I just want to show you how some of these charts are trading. I do think we're going to go much lower. This is why I think you ought to, if you're down more than 7% on anything, you might want to sell down, even if you have. Even if you have some more gain than that, you might want to protect your gain here, just because I do think that we are getting to a place very quickly in the market where we're going to probably go lower. Now, hopefully we'll get there we go. Get this going. I'm going to show you the SQQQ, and that should be doing well today. Pull it up. There we go. SQQQ. All right. So let's show you. There. Okay. Well, I should be showing you the SQQQ. Let's see if I can make that work. I'm having some issues. Let's see if I can make that SQQQ work. Let's see. All right. And I'm going to show the entire screen here. So there we go. All righty. So this is the SQQQ. As you can see, it may be trending up. I'm going to zoom in a little bit on that. So here we go. There we go. Yeah. So today, as you can see, we're starting to see some volume come into the SQQ. It's moved above the 40-day line. That's very significant. Oops. Hopefully I get my. I am just having issues with my. There we go. We'll just put that all the way up. Hopefully that'll work. There we go. Okay. Well, maybe not. Maybe not. Let me see if I can readjust here the share screen. I'm having a little issues here, so I'm going to go to the application. There we go. All right. So let's take a look at the SQQQ. It's moved up, and it looks like it's moving higher. This is typically a hedge that you would put on right before. Yeah, there we go. There we go. Okay. Yeah, sorry about the screen. I'm having issues with some of my bandwidth again. It just seems like they came in and they fixed it, but we still don't have enough bandwidth. Anyways, we're starting to see that move up. Right now is a good time to close positions if you can. I want to show you the Qs, QQQ, and this is why growth stocks, as you can see, we've moved down significantly here. Just in the last few days. This is the key support level here, this red line, and it looks like we're pulling lower now. this might be the beginning of a pullback, a strong pullback. So, you just can't tell. You just can't tell. But the last one we had was essentially the flash crash, and again, it was almost the same time of the year. It was February. This is the beginning of the COVID crash. Started right about here and ended very, very quickly right about here. But you'll notice when it pulled below that 200-day moving average, and then it pulled lower, and then it did turn around. But I do think that we may be in a situation, I hope not, but I do think we may be in a situation where we're going to pull lower than the 200-day average. If we do that, then, we're going to be in a market in correction. So what the definition of that, we're not there yet because we haven't fallen 10% from the high here. But we are it is looking that way. So be careful. You might want to start to close some positions and, maybe look at some other alternatives, such as puts and that kind of thing, because right now, I think we're gonna see some more weakness as well. Current thoughts on Apple and NIO, please. Okay, well, basically, I think right now is not a good time to be entering any new positions. The market is pulling back, and that's definitely the case here. We're going to take a look at Apple really quickly. The right now the stocks that I'm holding in the automotive space is Ford. Because it looks like they are starting to get traction against Tesla with their new Mustang. I don't know how well that'll do, but I do think that if you have some profit in Apple and in NIO, you might want to consider taking them now. I just think that we're going to pull lower. We've pulled below the we've pulled below this very key 40-day moving average. We did, it's tried to rally here, but this does not look like, in my estimation, of that it's going to hold, because even though Apple did put out a notice that they're going to buy back shares, I do think that Apple may actually be going lower, if you can believe that. So I would be careful right now. It's going to have to pull back probably and then form another base. So we might be in a situation where that actually may be a issue. So be very careful with Apple. If you're down more than 7%, sell it immediately and wait for a better time. Wait for an uptrend. We're not in an uptrend right now. And if you are if you have profits in it, consider selling a little bit to take some of your profits and then waiting for a rebound. NIO is same situation, but it's a little bit. It looks like it is moved a lot lower. So there we go. This is NIO. Let's look at the weekly chart for NIO. I just kind of want to show you that. Yeah, we're definitely showing that it's turned over. As you can see, these marks are my alerts here. We've alerted 3 times on NIO. It looks as if it's going lower. It's probably going to test the 200-day moving average here. So again, if you're down more than 7% on NIO, it's a good time to close that position and possibly wait for another uptrend. But right now, NIO is in a downtrend. Let's take a look. The checklist is still very good, 7 out of 10, so that's good. And the fund ownership is excellent. But the industry, and this is the key. I always look at the industries. Industries are the industry sector rank is falling. So therefore, there is definite movement out of this stock right now. So my advice to you, if you do have NIO, I wouldn't enter if you're looking at possibly buying NIO, I would not buy NIO right now, and wait until the pullback has finished. Right now, it looks like we're in the beginning of a major pullback in the market, and it's no reason to panic, obviously, because we all set our stop losses. At least I do, at 7% down. So anytime something falls more than 7%, I'm out. But this is something, if you haven't set stop losses and you're down, don't be a long-term holder, because what's going to happen is that you will end up basically regretting this. So now is a good time to possibly take a little bit off, possibly get into cash. I'm about 90%, over 90% in cash right now, and I am starting to short stocks. Lululemon being the first on the list. We'll see how that turns out. But I would really recommend being very careful at this point and not, opening any new positions. So there you go. All right. How long do you think this will take from? Well, this is just the beginning. I do think that there's going to be a massive pullback. This is part of the reaction to the Fed and also to some of the job numbers. This could, we could be pulling back, for 2 or 3 or 4 or even more months. So, typically we still haven't pulled into a correction, but I do think there's going to be a lot of selling probably in the next month or two, and it possibly will go down from there. So you got to be very, very careful. Markets, the markets that we've been seeing as of late are very unusual because typically, stocks just don't go up 5% a day. They just don't. In a regular market, there's been a lot of pumpage into the market. So I do think we're going to have a pullback. And by the way, if you stick with me, I could show you how to make money in pullbacks. As a matter of fact, I actually prefer, pullbacks sometimes to other markets. So I do think that we're just at the beginning. I think we have probably a few months ahead of us of pullback. That's my guess. All right. SQQQ is it safe to follow right up on? Yeah, absolutely. Absolutely it is, Brian. That's a very good point. I was trying to bring up the SQQQ just a second ago, and this is a way that you can participate in the in this down market. This basically what the QQQ does is it shorts the market for you. Let's see if we can zoom in a little bit. Let's see if I can actually get this thing to work. 1, 2, 3, 4. There we go. Hopefully this will give me, it will move up. There we go. Okay. Try to zoom in on this a little bit. Sometimes sometimes these controls don't work. It's not they don't work. It's that I don't work it properly. But as you can see, we've moved up very nicely on the SQQQ. Now, here's the thing about the SQQQ. You got to be really careful with this one, because if it pulls against you, you've got to get out of it. But right now might be a good idea to look at the SQQQ. It's up $1.25 today. Probably will be up tomorrow as well. 3 days in a row is very unusual, but one of the things I'm seeing here is there's a lot of there's a lot of activity, because you can see those blue bars and they're up strongly. Now, here's the thing about the SQQQ. It works against, it's a hedge, and it trades against the Qs. Right now the Qs are down, so the QQQ is up. So let me show you the Qs just so we can confirm that. The Qs, of course, are the NASDAQ 100, the 100 largest stocks in the NASDAQ. Here is a graph of the QQQ, and we have started to make a movement below this very, very key level here, this red line, and that does portend that we may be pulling lower. So the SQQQ is a very good defense, can be a very good defensive recommendation. But here's the thing about the QQQ. If you're thinking about doing it, you should do it as quickly as possible, because the longer you wait, the less the less potential you have there. So that's a very good advice with the SQQQ, Byron. I appreciate that. And also, you definitely always want to put that stop loss in. You want to be a little bit tighter on the SQQQ than you are on the other one. So not 7% down, 3% is good, and a trailing stop is okay. What I usually do, though, is I usually just put a hard stop on it, and then I just move it up each day. So that's kind of where I'm at on that. But that's very good, Byron. I think you do well on the SQQQ. The market direction is definitely changing, and yeah, that's a very good call. Another question, CHX. Let's take a look at CHX. Now, not all the things are going. Yeah, okay. Drilling technology. I like your thinking here. By the way, we're seeing a rotation, but we're also seeing, we're seeing movement out of the Qs, which typically are technology issues. We're seeing movement into some of the oil and gas drilling. This is excellent. Oil and gas drilling. This is the fourth. You can see this is 4 out of 197. So this is a very good sector to be looking for stuff in. It's up 52 cents. I like this one. It doesn't really have a great base pattern, but look at that relative strength, 89. Now, what does that mean? Well, we are seeing a rotation out of some of the tech names, the Apples and the Teslas and those kind of names, into some of the more, some of the bigger economy stocks. I started a position about a week ago in Halliburton. That's an oil service company. I do like the oil drillers a lot. I think there's a lot of potential there. I'm going to kind of show you who's in the oil drillers here, because I think this is very interesting, and this gives us an opportunity, possibly to find some good benefit. One company here, it's called RIG. It's called Transocean. They're based in Houston. They also have a relative strength of 94. I want to kind of show you this one, and also Nabors. Nabors is essentially an oil service company, but let's look at RIG, because I think that RIG has some very good potential. So let's kind of look at the chart for Transocean here. It's very cheap stock. It's $4.12. But it's actually it's a real company, and it has a decent checklist let me zoom it out here a little bit. It has a decent checklist at a 66%. So this is actually a fairly good company. Not necessarily recommending it, but this is one that you might want to. Oops, there we go. This is the oil and gas company. See, it's number 4 on the list. So that's a key level. I do think that we're going to see a lot of movement into these kind of oil stocks. And so this is another one that you might want to look at as well, Byron. And also, it's called Transocean. Wouldn't necessarily totally recommend it, but it does look like it's getting a lot of strength. There's a good volume coming in it. Their numbers are looking pretty good. And so this is one that you might want to possibly put on your watch list. Not necessarily recommending this one right now. I'm not in it. But it is a good company called Transocean. And it's a very inexpensive stock, relatively speaking. It's a $5 stock. Here's one thing: once we start to see this rotation, you're going to be able to get into a lot of stocks that, are basically. Normally I don't recommend stocks that are under $10, but this is kind of a special case because they've been so beaten down. Last year this stock was, it's just so beaten down the sector. So the oil drillers, I do think may make a move. That's another reason you see companies like Ford, another company that I normally wouldn't recommend, but with the EVs and everything happening in the rotation, I think it may be good as well. All right, so thanks for my little rant there. Hi, Jim. What do you think about EVs and tech stocks? Most of my portfolio is in those sectors. I would say rotate out of those sectors as much as you possibly can, because I do think there's going to be a sell-off in those sectors. I know that that's not what you want to hear, because everyone, but I do think there's going to be a lot of profit taking, and so I definitely think that you need. And I'm currently at a huge loss at 50%. Okay, here's the thing. If you hold on, they may come back to a level that you like. Sell your weakest ones first. And then, this is why you always want to have that stop loss in there. You always want to have that 7% stop loss that's in there, that, it pulls back, it sells you out. And this is to protect your capital. Right now, don't hold on. Don't hold on. It's probably better to thin your portfolio out. Get rid of your weakest stocks right now. Get into cash, because there will be opportunities, and that's a big thing. So I really, really recommend not holding on and becoming a long-term investor in some of these stocks. Now, obviously, that's just my advice. So that's just my take on it. I always sell a stock, and this is why I make so many videos on this. I always try to sell a stock when I got to add to the screen. Sorry about that. Have a little bit of a issue regarding that. So let's get everything back up here. A little issue with StreamYard. Okay, so sorry about that. All right, let's take another question from Barry. Thanks, Barry. From your experience, how much of an effect does a 10-year yield affect the market? 1.5% isn't much when you. Well, here's the thing. I do think it affects the market a lot because essentially we've had negative interest rates, and there was no place to put the money. So basically, what do? They put it in. They put it in the tech sector, which makes sense because that's where the profits are. But now, once there's a little bit of an increase in inflation, that's when people run away from the growth sector. They're going to move. There's going to be a movement in the stock market to companies that actually show a profit. So a lot of the companies that have been very, that have been moving up very, very nicely are not going to participate in them. A lot of them are going to sell off because they don't have real profits. Now that's not to say that tech companies are all washed up. They're not. There's a lot of tech companies out there, like Microsoft and Apple. Microsoft more so than Apple in this way, that have solid earnings. So basically, what this is going to do is it's going to move the capital into the companies that have solid earnings. This is the reason why you're seeing the movement to things like the mining stocks. Mosaic being one of them. They're a potash miner, and they're in my smart portfolio. But even they're down. You're going to see that movement into the real economy stocks that actually have earnings, and that's why oil stocks that have been so beaten down. It's not that oil stocks are anything better. I do think we're moving to EVs, but there's still a lot of demand for oil, and they do have positive earnings. So that's something that you have to look at. I mean, you definitely have to look at that in terms of in terms of what's going to be what's going to do well and what's not going to do well. So ARK Invest. Okay. Everybody now is following Cathie Woods. I think that, she may do very well in this downturn, but my feeling is, at least in the short term, she may be under a little bit of pressure because of this. Let's take a look at the chart. You see there's a downward trend. Yeah. There's a downward trend on ARK. Yeah, there we go. And we've pulled below this very key level. This red line here is very key. We've pulled below that. We've also, if you notice, you see this little Easter egg here. I don't know if you can see that. These are huge sell signals. People are selling right now, at least now. It could turn around tomorrow, but they are selling ARK. So take a look at what ARK is in, and I don't think you want to be in it as much. I basically exited my positions in Tesla. Oops, there we go. Come on. Yeah, I exited my Tesla positions basically about 2 weeks ago, a little over 2 weeks ago, in about the $700 level. So this is something that you might want to consider if you're in some of these stocks and you have a cushion. That's one thing, but if you just got into a lot of them and you're down more than 7%, I'd consider selling. I really would, because it looks like ARK has made a little bit of a bounce, but it's not the kind of thing you want to see. Let's take a look at how the SQQQ has traded after hours. Yeah, okay, so it's off a little bit, but it's still, it was up 8% today. So that's what's happening. There's a movement out of the Qs, which is primarily growth stock, into the other areas. Let's look at the Diamond, the DIA. That's an ETF that covers the Dow Jones, and that's actually up, believe it or not, just slightly. That's actually up. So that leads me to believe that we are definitely in a market rotation, and that can be good too. You can make money in market rotations as well. So you don't have to trade only tech stocks. Thoughts on Shopify? Shopify has been a tremendous winner, but here's the thing. Tremendous winners can set up for issues, and I don't think this is setting up as a short, but it kind of looking at 1152, and it's not quite a short yet, but this may be a shortable stock if it pulls below if it pulls below if it pulls below the 200-day line. If you're down more than 7% on this one, please consider at least selling part of it, because it's probably going to go a little bit lower. So that's, this is going to affect, this is going to be, I have a feeling this correction is going to be a little bit indiscriminate, and it's going to affect a lot of things. They're off 100. Shopify today is off 10%, which is significant. It's off $128.77. It's not shortable yet, but it's getting to the point where I'm going to consider possibly taking a short position on this one. But it's not there. It's on my short watch list, but it's not there. So if I had Shop, I would probably be out. Let's look from Rakesh. Let's look at IZEA. Now, almost everything today is not going to be good, because we are moving lower in general. Okay, yeah, IZEA. Okay, this one is a relatively expensive product. Op is a marketplace for white label. That's kind of interesting product. Interesting idea. It's got a fairly large short interest, so yeah, I don't really know much about this one. It's in a good area, but I think that its sector has been falling. Yeah, 27 is still pretty good. The ownership, no, it's a very thinly traded stock. 8, I would watch this one, probably avoid this. Let me take a quick look at another stock. I kind of want to see how my Lululemon short is doing. So let's take a look to see. I want to look at the after hours on that to see if I will close that or not. I had to close a short on, okay. Yeah, no, it's definitely, let's see if I can, yeah, it's pulled back 285. Okay, good. I'll be in the short for a while. Let's look at let's just put up some of, trying to navigate everything here. Let's look at the data boxes. Okay, we've got okay, so we're up. That's not a lot of shorts, only 3%, so that's good. Okay, after hours we're up a little bit. We bounced 285. Yeah, okay, that's not bad. All right, I was just looking at the condition of my short that I have on that I have on right now. All right. Okay. How does this correct compare to the one in September? Well, we're not even in. This is mild. The one last September was one of the fastest. And again, I don't know if you've watched me a long time, but I was warning. And this week I've been warning basically for the last few days. I mean, with the marketing correction, so I'm not surprised that we're pulling back. But it lasted 6 months. I mean, it lasted about 4 months, which is very short. Typically, the corrections last 6 to 9 months. So we'll see. But I think we are going to be turning over. We're going to be in a correction, probably. So here's another thing. If you're on the Action Trade Alerts, I want to kind of show you this. I'm going to take a look at the market direction tonight and see basically, what, where it's going. And I do think that, it's very easy to subscribe. Just subscribe to, oops, come on. There we go. Just subscribe to to YouTube, the YouTube channel, of course. But if you want to get the free Action Trade Alerts, it's super easy to do. Just go to www.DallasTradingFloor, and I'll send those out. I'm going to probably try to send out an alert probably by morning tomorrow to kind of gauge the market direction. But right now, we are pulling back, and it's time to get into cash if you aren't already there. If you're down more than 7% on any of the stocks, consider possibly taking a little bit off. You don't necessarily want to be a long-term owner of a lot of these stocks, because sometimes they come back, but sometimes they don't. So protect your capital. That's the name of the game. And so that's my take on it. All right. Okay. Hey, Jim. What are your top recommendations for mining stock? Very good question. Thank you for this. Mining stocks are one of the areas in a pullback that is likely to do much better than any of the other areas. So let's take a look at the. I just kind of want to show you kind of which sectors are doing good and which sectors are not, and that is basically, if you could see, I don't know. Let me see if I can zoom in a little bit on this so you can see it. Okay, there we go. So take a second for it to resize the window here, hopefully. There we go. Okay. I'm gonna just go full screen. Okay, so as you can see, I'm concentrating mostly on the oil and gas, but drilling. But if you notice, right below that, there is this. This is the number 5. The number 5 sector right now is mining, metals, and ores. So let's take a look at what makes up that particular that particular group. It's number 5. There's only 5 there's a lot of stocks in this, and these are the top these are essentially the top stocks in there. So let's kind of look at Southern Copper is probably Freeport McMoran, FCX, and Southern Copper are probably the 2 best. Let's look at FCX first. And this is a very large company. It's based in Phoenix, Arizona, and it's pulled back a little bit to the to the 50-day lines. It's down about $1.23 today, but it's looking very good. It's got a relative strength of 95, and basically it is looking, it's at least it is sort of a safe harbor in what probably is going to be a little bit of a storm here. So that's one I would recommend. FCX. I also would recommend possibly, as you can see, mining is number 5 rank. So that's a very good rank on that. And, that's something that you could be in right now, that, if you want to be in the market and you don't want to be out in cash. I like to hedge with cash a lot of times when we get these corrections. But if that's not the case, then this is probably one of the better areas to be in the market right now, and that's either in oil and gas drilling or in possibly mining, because those areas typically do better in this kind of in this time. So let's also look at some other areas possibly, and I want to show you the oil and gas drilling. This is why I was talking just a few minutes ago about Transocean. The oil and gas drilling group is number 4. It's even better than the mining group, and there are a number of top stocks in that group. One of the ones, of course, I really like is RIG, R-I-G. It's Transocean. It's got a 94 relative strength. Nabors Industries is also excellent as well. So let's take a look at Nabors. There we go. Okay, so Nabors is it's a little bit more pricey stock at 114. It's up $3.50 today, and that is probably one of the better ones. Let's look at the daily chart. As you can see, it's moving nicely. It's moved up above this buy point on the consolidation base at 76.76. There was a breakout, and I do think this one is continuing to go up. Now, here's the issue with Nabors. It is extended right now, so we're not at an optimal buy point. So let's see if we can find a one that does have the best in the oil and gas area, that does have the best chart. Okay, so I'm going to look at okay, off the day. So Patterson. This is a low price stock. This is $8 stock here. And it looks like, there was essentially a buy point at 708 on this one. This is symbol PTEN. It's Pearson Utility Energies provides onshore construction drilling services to oil and gas producers. It's kind of like a miniature Halliburton. Halliburton's also in this category. It's got a nice relative strength line. This is the kind of stock that you ought to be looking at right now is these oil drillers, because it looks like we are going to move. The oil drillers probably will do very well, at least in the short term. It's because the price of oil is going up, and the supply has been, has been. I'm going to try to give you some more intelligence on the oil sector going forward, because I do think there's going to be a lot of continued. If the price of oil is above about $60 for West Texas Intermediate, then I think there's going to be a lot of action in this area. So this might be an alternative, if an alternative place to move from some of the techs, take some of your profits in the techs, and possibly put a toe in the water on some of the other, some of the other areas like the like the oil and gas area, because I do think that's good. So, on the mining stocks, that's good. I think Freeport McMoRan FCX is probably your best bet. It's huge. Also, there's an Australian company, BHP. It is just a monster company, and you can buy the ADRs on that. Let's take a look at that one. That's one of the ones that I like a lot as well. So I'm going to go back into the mining I'm going to go to the mining and ores sector here, and let's see. Okay, so I'm going to look at the stock. I'm going to look at all the stocks in the group, and basically, I'm not as high on the gold miners as I am on just the basic ones. I like this BHP. This is an Australian company. It's pulled back a little bit today. I don't think you want to buy it right at this level, but this is one you want to put on your watch list. It's called BHP. It's an Australian mining company. They're integrated. They have mining operations practically everywhere in the world now. It's pulled back to the 21-day exponential, so we want to see if it holds that line. But in general, I very much like this BHP, and that's the symbol on it. And so that's another mining stock that you might want to consider. All right, thanks for that. Okay, what's the difference between spreads and okay, you're probably coming in from Europe. A spread, basically, what a spread is basically what you're doing is you're selling one contract and then you're buying another one for basically for basically you're taking a position in that area. So for instance, I have a spread on Rocket Mortgage where I have I have sold the 25 call and I have bought the 20 call. So if the stock, if the stock closes above 25, when this is called a bull call spread, when it's expired, I will basically keep the premiums that I got. Now I'm protected on that because it's not like having a naked call, because when you have a naked call, you can lose all the money. I have an underlying call that protects me on the downside. So I'm only taking risk on a spread of $5. And that's what a spread is. So if you want to learn more about that, on my website, on my YouTube channel at Dallas Trading Florida, youtube.dallastradingflorida.com, I show you how I do some of these spreads and what they are. So hopefully that will be somewhat informative. I could talk for literally hours on this. It's a great subject. Okay, what was your Lululemon put and strike price and the expiration? Okay, here's the thing, right? I did not use options to use options to short Lululemon. I actually went in and borrowed stock. You can do this if you have a level 3 account. And I do have a level 3 account at TD Ameritrade. I went in and I actually borrowed the stock and then I sold it. So that there is no strike price on this. I actually shorted the underlying stock. This is without options. Now you can do this, and I may be putting together a trade on this. I don't have a trade on this right now. with this. But what I did on that, and I can show you. Let me just pull up the chart here, and I show you kind of what I did. What I did on this to kind of give you an idea of what you possibly could do. Hopefully I've got it now. Do I have it? No, I can't. Oh boy, too many things are running. Screen sharing was canceled. Okay, there's just too many things going on here. Unfortunately, I'm going to have to do this offline. Yeah, I'm gonna have to do this. No, maybe I can get. No, it won't let me. Maybe Chrome tab. No, it won't let me. Okay, I'm sorry. I can't show this to you because I've lost my underlying program. It's not running, so I apologize on that. So, anyways, okay. Let's look at this one. ELMO. Is it ELMO? Is that right? Let's to the ELMO, and let's look here. No, that doesn't appear to be ELMD. I'm sorry, ELMD is the symbol there. I look at ELMD. Let's take a look. Electromed manufactures products that provide airway clearance for therapy. Okay, well, it's up today, and that is good because we like anything that's up today. That's showing some strength. It's got a relative strength of 23, not very powerful. Just trying to see kind of what the take is on this. It looks like it is moved up to the 200-day moving average. Here's the thing, I wouldn't buy this, and the reason I wouldn't buy it, even though it does have some very, very strong volume here, I wouldn't buy this because it's below the 200-day line, and we're in a declining market. So you got to be extremely careful when you see a stock that is below this 200-day line. Now, even though it just pulled up to it, I do believe it's looking like this is going to reverse and go lower based on the chart action. So I could not recommend buying this. It only has a 33% checklist. So I would have to say I'd pass on this one if it were me. I would pass on this one. All right. EOG. Oh, looking good. Yeah, Barry. That makes sense. Yes. Okay. This is the oil and gas. Yeah, I think you're right. I think you're right. Let's pull this one up. EOG Resources. Not only is it looking great, it's looking stellar. By the way, Barry, these are the kind of stocks, everybody, that we're going to rotate into. And look at this. For basically practically the whole year here, this thing was laggard. It was under. You see this? And this is what you want to look for. Before this stock was below the 200-day line. That's the black line here. But starting in December, it started to move above that, and now as the drillers are coming into vogue, it's moving very, very nicely. So this is a winner, and this is a good chart. It's a 69 relative strength, which I like to see it at 80, but believe me, in this market, 69 relative strength in an area that is being invested in, I like this one a lot. And look at that nice look at that nice volume. Let's take a look at this in the group that it's in. Currently, it's in the oil and gas U.S. exploration. It's 7 out of 197 sectors. So let's look at that group to see kind of what we can see on that. So I'm gonna go over to that sector. Oops, didn't let me do that. Okay, so I'm gonna go to number 7 on the list. Okay, there we go. So let's go back here. Number 7 is U.S. oil and gas drilling. So let's go down to that one. That's a very good area to be looking for potential turnarounds in. So let's look at this. Let's look at the stocks in that. EOG is at the top of the list, and it is doing very, very well. Yeah, look at this. Very, very nice all over the place. It's just looking good. Another nice thing about EOG Resources, to be honest, it's a very large company, and so it's very liquid, and that is a good thing. So I'm really liking that. It's looking very, very nice. Is the checklist a perfect checklist? No, it's got a 55% checklist, but I do think that it's a little bit extended here. I want to see if it pulls above. I want to see if it pulls above its today's price but I do think it's buyable. I absolutely think this is buyable, and it might be a very, very good buy here. EOG Resources. Thanks, Barry. This is a good one. It doesn't have a traditional base. It's not like a cup with handle, but I'm looking at the relative strength line. I'm looking at the action. I'm looking at the market in general. I think you got a winner here. Now, other ones that you might want to possibly look at in this sector, and let's look at the oil and gas drilling. So let's look at the other ones in this group, and I'm going to look at just the top ones now. I think though you could look at FANG, Diamondback Energy. That's this one right here. I want to kind of show you. I kind of want to show you FANG in this group, and so I'm going to close the window here, and hopefully I'll get this to work. This is another one that I think. EOG looks really, really good. As you can see, I had a buy point in here. So that little arrow there, you can see. I don't know if you'd see it. This is looking good. There's not really been a super great place to buy it. It's just been coming right up the 10-day line. But this is another one I think that you got to really look at. It's FANG, FANG is the symbol. So let me kind of put that one up here, and that's kind of one I like, just because it's done so well. So FANG, FANG, it's Diamondback. So think of it, this isn't a FANG stock, but the symbol is FANG. So this is another one that you might want to kind of look at potentially as well. FANG, they're heavily into the Permian, and I do think this one is going to do well. Basically, they're flat after hours at 81.26. So that's something that you might want to look at. But I definitely like that one in the oil and gas area. Jim, let's look at PayPal. Okay, thank you, Arnold. Appreciate it. Always. PayPal is a long-term leader, and I do like this. I do like PayPal, in general, but but right now, unfortunately, it has fallen below a very key level. I'm currently not in it myself, but as you can see, it's pulled below this very, very key level here, which is the 40-day line. Now, I typically don't buy any stocks that are below the 200-day line. That's here. But when they fall below the 40-day line, then I'm a little bit concerned. What I like to do is watch to see these things fall and then hopefully reverse higher. But right now I think you've got to be a little bit careful. If you have to get out of the stock for a while it resets, that's okay. Just you can get out, stay in cash a little bit. It's a tough market right now because it is changing its direction. It's still, this still has a stellar checklist. It's 88%. And the industry, unfortunately, as you can see, the industry has fallen. It's now 111. This is kind of an upside down world. When the market starts to change direction, the former laggards of the market, the oil and gas drilling and the mining stocks, they typically move higher because people are looking for value. This is more of the value side. The growth stocks, they typically move lower. So we're going to see a movement out of some of the growth stocks into some of the value stocks now. And PayPal is considered essentially a growth stock, even though it is profitable. So that's something I wouldn't be rushing to buy it. Right now is not a time to be quote unquote buying bargains in the in any of the growth stocks. It just isn't a good time to be bargain hunting, because I do think a lot of stuff is going to go lower. Now, that said, many of the mining, oil and gas, and those kind of stocks, they are potentially moving higher. So because there's going to be investment and the money has to go somewhere, and the oil drillers, typically the ones that are still there, are much stronger, and they have strong earnings. Typically, they're going to have strong earnings this year because the price of oil is going up. So we're going to see probably here in Dallas the the gallon of gas is about $2.30. It's probably going to go up to $3. I think in California it may be over $5 by summer. So that tells you something. Okay. Thought on PLPC. Let's look at PLPC. Let's look at the chart. PLPC. And see if I can get that to come up here. All right. Perform line products, manufacturers wire products. Interesting. Closures. Interesting. This is a kind of a, this is sort of a, just an average manufacturing company. I don't know. Oh, for data communications. Well, this is probably, pretty good. 66 checklist, not bad. Let's look at the industry. The sector is not bad. 71. I like that. But here's the thing: cabling, telecom, and I think there's going to be, with the 5G build out, we are going to see, obviously a lot of spending in this area. But I'm lukewarm on this one. I wouldn't necessarily, I wouldn't discount it, but I'd be a watch list for this one on me. I wouldn't probably be a buyer of this one. I just want to be in a sector that money is flowing into. I want to be in the top stocks in the top sectors. And currently, right now, those typically are some of the oil stocks and some of the mining stocks, at least this week. So we'll see. All right. Hey, Gush. Oh, this is an interesting one. This is an interesting one. Let's look at Gush. I haven't traded Gush in a while, but this could be a spectacular one. Okay, Gush is, it's okay. So this is the oil and gas bull. Not a bad idea. This is a really interesting stock. This is kind of like an SQQQ for oil and gas, and I think that it's just been on the floor forever. But this one actually could, depending on how the OPEC meeting goes, this could be huge. You're starting to see some people come into Gush right now. This is an ETF, and it basically is a 2 times the S&P oil and gas area. So it's I do like this one, at least for right now. Let's look at MUR, MUR. These are interesting ETFs, I think. And this is where you could Murphy Oil. Okay, yeah, this is quality. Yeah, look at this one. Very, very good, by the way. Mr. Singh, these are very good picks. I like you bringing all these stuff up. This is very good. Before, again, right up to December, we were basically below the 200-day line. You can't really buy it below the 200-day line now. It's moved above it very nicely. Not a really good necessarily setup here, like with a base, but Murphy Oil is a good company. I know a little bit about them. The checklist it's getting better. It's a 55. I typically like to see 66 or better. That's 4 out of 9. But in this kind of environment where it's changing, look at that 26 rank. That's very good. It's moved up significantly. This is oil and gas independent exploration and production. So I like this one. I like Murphy Oil. Yeah, very good. It's got a lot of funds in it. This is an old line company. I think that with the rising oil prices, this one should do well. This should do well. They're based, I think, in El Dorado, Arkansas. So very, very good information on that. Let's look at DBO. DBO. With some great ones. Invesco DB oil funds. Okay, exchange traded. Okay, yeah, this is another way to play it. Very good stuff. Yeah, the oil names, at least for right now, it won't be forever, but at least for right now, I think we're going to see some increased strength in the oil area. So this is also a good one as well. Out of the ones that you put up there, I like Gush probably the best of them. That's the exchange traded 2-time oil and gas S&P 500 fund. So very good stuff there. Very good stuff there. All right. What are other shorts other than the SQQQ? Well, I shorted in terms of a there are directional shorts besides the SQQQ. I just have to remember them. I have to get back to you on that, but you can look them up. Here's the thing. I personally for an ETF, I usually use the SQQQ. Now, I do have a short open on Lululemon, but I actually borrowed the shares and sold them. So that is a true short, and I'm doing it not through an ETF. But that is also a very good way to go. So I will try to get back to you with more stuff. Okay. Thoughts on CCIV for long term? I just again I probably talk about this stock every day. This is a exchange traded fund. If the market turns down, these stocks will be toast, literally toast. So I wouldn't be in this one. I just wouldn't be in this one. And if I was in it, I would get out of it. It's pulled back to the 40-day line. As you can see, it just went up and then down. So no, this is not a long-term investment. SPACs and really, they're not investments. They're just potential investments. So I would be out of CCIV. Churchill. Palantir. Let's look at Palantir. Everybody knows that I did have Palantir. I sold it off when it pulled back, and I do think it's it looks like it's getting some support. So that's indeed good. Long term, I like this company, but right now with the market churning south, I am much more careful. I want to be where the money is going and not coming from. This is this is an area when the money was coming into the market hard, like it was in the last few months. Was a great area, but I think you got to be careful with this now because it's sort of like the tide is receding a little bit. And that's going to make the money, the capital move essentially from the growth stock area into other areas such as oil and gas. So right now, if I wasn't in, I would just put this on a watch list and not do anything. Okay. Question. Thoughts on CCIV holds? Sell. Absolutely. Just sell. You don't want to hold this one. Yeah, this is, I just, I can't, I'm trying to be nice about this, but you need to sell this one. Just sell it now. Sell it now. It's too hot of a potato. Just sell CCIV. It's not going to work in this market that's changing direction. A company like CCIV just isn't gonna do well. So that's what I would do, RG. All right. Estimate of tech bear market time span could be. I've seen them as long. I've been around. I was around. Believe it or not, I wasn't really a big investor in 2000 because I didn't have the capital. But I've seen them run. I've seen them run. 6 to 18 months. And that's what happened in 2000. As a matter of fact, I didn't start buying Microsoft until 2017. I had sold it originally in 2000, and then it didn't actually come back to its former level until 17 years later. So I'm not going to say that's going to happen in this case, and I don't even know if we're going to go into a correction, but we're definitely moving that way. So we could be in for a little bit of a time. So let's see. Thoughts on NEO? Last thoughts on NEO. You know what? I would just consider possibly, if I consider selling. I really would at this point. Just wait until the market firms up a little bit. I'm not saying it's a bad company. It isn't, but I just think that NEO is going to get a lot of competition, and one of the companies that they're going to get competition from is Ford and GM. So that's my thoughts on it. Well, I have wasted a whole hour of your time. Hopefully I will be able to come out with some explanations here on kind of this rotation. And what I'm going to do is I'm going to try to put together an action trade alert that I'm probably going to send out tomorrow morning, a little bit of research maybe. And but in order to get that, you have to be on the action trade alert. So what you need to do is to go to subscribe to the action trade alerts is to go to the website. Oops, there we go, to www.Dallas Trading Floor, and then when you get there, you just first and last name, email address, and you'll be right on the list, and you'll be sent out as quickly as we can get it out to you. So until tomorrow, happy trading, and be safe. And if you're down more than 7% on any positions, consider possibly moving to cash, at least temporarily, to see this. The market may firm up and may move up higher, but my guess is, at least from the fact that I'm seeing a lot of weakness in the market, I think that we're going to correct. Possibly we're not there yet. We're in a market trend under pressure, but I think we're going to correct. I think it's going to move down, and at least in the short term. So I think it's prudent to have most of your portfolio right now in cash. And anytime long-term holders, if you're down more than 7%, I consider selling them and waiting for it to bottom, and then possibly buying them back. You can always buy back a stock. It's not a problem to buy back a stock. What you don't want to do is lose the gain that you've had, especially even if you're up, say 10, 20% on a stock, consider selling it, because you don't want to round trip it if you can avoid it. So at least until tomorrow, happy trading. I'll be back at 2:30. Thanks everybody, and I will see you then.